So this is going to be the video about the golden arrow, and this is a familiar chart and is the trade that we executed on today. So as you can see right here, we have this breakaway gap drawn liquidity. This portion, as you can see, is slightly unfilled, and breakaway gap drawn liquidities don't just have to be liquidity in the imbalance. They can be close proximity liquidity, like this is in the imbalance, but then this imbalance was drawn, price was drawn to it and then continued to range within it. So once we saw that the sell side targets were showing some resistance for price to go lower, my eye and the way that we're anticipating the golden arrow to form is we're going to see an unwillingness to go a certain direction and provoking this to be a market maker buy model. Obviously we're on the 4 hour showing the key levels that we used for this trade and this golden arrow that played out today, but we are then going to look for, okay, in this fractal of price, once we take this low, this candle's high is a breakaway gap drawing liquidity, and that became my ultimate target. And if we go down to the hourly, you can see on the hourly time frame this high rests within this imbalance, so that created the breakaway gap draw on liquidity. So now once we've got the raid here at 8 AM, if we drop down to the 1 minute, we've got our high time frame bias, MMXM framework, a raid on sell stops, and then we can start to scout for the 7A open, and then we have true manipulation. This is all the golden arrow framework. This isn't just an entry model, this is all the framework of the golden arrow. So we have this first level of distribution in our market maker buy model after we had our smart money reversal, and then we had our first targets, as I stated, above the true manipulation, so that became our first draw on liquidity. And then notice after that we formed this fair value gap. Now this fair value gap was the fair value gap that broke the true manipulation high. So think of this as a breaker. So a breaker is where we have low, high, lower low, high, high, and especially when we displace through it here, we don't want to see price return to this lower gap, and as you can see it stays completely unfilled. So we're continuing along price. We do not get the golden arrow anywhere along here. We have this key low, type 2 intermediate term low that doesn't get ran. We have this inversion gap that price accumulates in, and then we have this type 2 intermediate term low that gets rejected, which is what we want to see, and we wanted to see expansion from here. So us following through price, we don't see our model yet, which is the breakaway gap and then the immediate rebalance, but what we do get at this point in price is true manipulation again. Now this is great because this is going to knock out anyone who's trailing their stop loss too aggressively below here, and also generate some more liquidity for us to capitalize on. So I see this type 2 intermediate term low completely filled this pink shaded area, which is this BISI fair value gap that broke the true manipulation high with velocity and displacement. So we've got a protected low here. So this low now should not be traded to and through and close below, and this gap should stay unfilled. Perfect, we see it. So we get the true manipulation, buy side first, then sell side, then we see a willingness to go higher. This gap right here is a breakaway gap, actually I will use this. If you see a green shaded area on my chart, it's either a breakaway gap drawing liquidity or a breakaway gap. Now what we want to do with the golden arrow is align it in MMXM framework, and then in itself, after the first distribution, the second distribution comes after we ran a low. Now we've made it a protected low. Now we have a breakaway gap when we see this candle here close above this candle here. So this gap is being left unfilled. So that creates our entry here. Perfect. This is the golden arrow entry, and you will be slightly timid at the start to enter on it, but I can assure you once you catch one of them you will never ever look back. So this is our ultimate draw on liquidity up here, this high and the low of this breakaway gap drawn liquidity. Again, that green shaded area used for breakaway gap drawn liquidity and a breakaway gap itself. So your long position goes on here with your stop loss here below this breakaway gap. But if you're the type of person who fears that and you don't like to have your stop loss under a breakaway gap, even though the logic suggests it should not return down here, it can partially fill it, but again this will be a slower price run. So ideally, do you want to be in the trade? No. So if we enter here and price is coming down and touching the breakaway gap, you can reduce your risk by half or 30% or any amount of the trade that will make you feel comfortable. So our take profit goes here, so that's a 1 to 3 and it hits in 12 minutes. So a 1 to 3 in 12 minutes. Now if you're the type of person who doesn't like to have a tight stop loss like that with 26 points, which isn't that tight, but I can understand why you wouldn't want it there, because it's a bit scary to have it below a breakaway gap, even though all the logic with the true manipulation before the golden arrow, that is the key, gives us that narrative that we can put our stop loss here. If you are uncomfortable at the start, you have three options, sorry. The first option would be 50% of this candle's body, which is a bullish order block, so just below here. That would be another option. You still get a 1 to 2 in 12 minutes, or 1 to 2.4, sorry. And then your next option is where this black line is, which is the rejection block, which is the lowest close in this candle formation. So if we just saw that price is a bit more stagnant and the golden arrow isn't setting up with true manipulation before it, but I wouldn't advise entering on that. Wait for the true manipulation. Then your stop loss can go below here, which is this black line, which is the rejection block, and that would be a 1 to 2. But again, if you're scared even more, your stop loss goes at the C of this type 2 wick, so your stop loss would go here. So again, you get a 1 to 1.7, which isn't the greatest RR in the world, but you can easily make a career off a 1 to 1.7 in 12 minutes, I can assure you that. So those are your options for stop loss, but this is where your stop loss should be with the golden arrow and the person who invented it teaching you how to trade it. That is where your stop loss should be, because the narrative is if prices return into this breakaway gap, it's not going to be as explosive. So let's rewind price here and relive this playing out. So let's just play it forward a candle here, and then we see this breakaway gap, boom, this one here. So we see that is the point where you would set your long position here on this candle's high. Stop loss goes below here, at least a little tick below it, and then we will watch for our entry. TP is set here. So let's manage this trade. So trade management, we'll drop this to here, and then we shall add our quadrants, and this will allow you to manage your trade more effectively at the start. of your trading career. So what this is showing is a disproportionate relation in the targets that you reach with how your stop loss can move up. So when we move to the upside by 21 points to the upside, our stop loss can move up one quadrant of 6.75 points. So let's play price forward. So here we get that first quadrant. So now stop loss can move up from there to here. Again, we're resting in this breakaway gap, and it will seem scary at the start, but the logic is price should not return here because of the true manipulation, this protected low. We're also on the second stage of accumulation, so we've raided the low. First stage of distribution, true manipulation, raid the low into a key level, this fair value gap that broke the true manipulation previously's liquidity, and now we can manage the trade. So we'll play this forward. Here, boom. Once we get to 75%, so here on this candle, this one candle, once you get to 75%, your stop loss must be at a PDA rate around break even. So where would that be here? That would just be smack bang here at the immediate rebalance high, this candle's high. But what I would do once you get this close to your target is to move I have to move this to account for the stop loss moving up, is just to move this just so it covers your costs. This is our entry, this covers commissions. So once you get to 75%, move your stop loss and your protective area above your entry slightly, just so you can lock in commissions. If the worst case you get to 75%, that is also the time you look to partial. Once you get to 75%, look to take a partial and look to have your stop loss at least just above your entry to cover commissions. That is effective trade management. If you're in my community and I see you let a trade get to 75%, then reverse on you without taking a partial and without covering your commissions, I will give you a slap on the wrist for that personally. So make sure you're effectively managing your positions and you're not just leaving it to a will at that point. So that is essentially incorporating the golden arrow with true manipulation, which is the deadly trio, and the MMXM framework, which is exactly what you need to be doing to effectively profit in these markets, because it happens day in, day out. So if I play this forward, okay, prices dig down there, boom, and then we're out, done completely. One partial, I take profit, and stop loss moved once and twice because we had that willingness to price to expand quickly. Look, it went from down here to up here in one candle, in one 1 minute candle. There is no reason at these little retracements to start thinking, right, we're going to reverse. Because if we just replay again here, if we watch these next two candles, we've just missed our take profit, yeah, and then we'll play forward. This candle here creates a bearish candle. Watch, it's going to be very quick, but watch how this next candle forms that bottom wick. It's scary to the average trader, especially in the 1 minute. Boom, there, look at it. You see how it wicked down here, and people at this point will make a decision, and when they see that wick, they'll get scared, they'll see their profit drop instantly and quickly, and they'll basically shit themselves. We want to avoid all of that because of all this previous narrative. Look at all this narrative for higher prices. All of this narrative, all of this narrative, all of this to continue the second stage of distribution. And we've got a clean breakaway gap drawn liquidity, which, as I've stated, have a high probability of hitting when you're in on the right side of the market. So don't shit yourself when you see these big drops on the 1 minute or the 5 minute or the hourly, and you take a step away from the charts and you see them. If the narrative is correct, these are more opportunities for buying, or it's just manipulating you, trying to make you make a decision when it's wicking down when you're actually on the right side of the market. So essentially what we're going to do is I'll be sending golden arrows in here, and you will be seeing golden arrows play out, and oftentimes you'll find it tries to fake us out once we're close to targets, because it doesn't want you to capitalize on it, or it wants to accumulate more positions on a buy and distribute more positions on a sell. So make sure all your decisions are made on candle closes. That is another key thing to write down about this model and all your trading decisions and models. Once you get to 75% of your target, you cannot let price take you out at a loss or a break even. You have to cover commissions, and you have to have taken a partial. All your trading decisions are made on a candle closure, not a wick. If this candle closes below this candle here, then fair enough. If you want to close the trade out there, I can see some validity to it. But look how this candle closed back inside this body, and if we look at how it reacted off here, look, it tapped the CE, didn't even reach the lower quadrant. So that's showing us that that could have been another entry for you before this final TP. And then as we play it through price, we can see that the TP gets ran, and you never needed to stress about your TP not getting hit. Look how it just fakes people out and tries to scare you just at the last second. Do not fear that unless price is showing closing below here first. So a closure below the CE of here would be problematic, but it doesn't invalidate the trade. A closure below the gap is very problematic, so then you can think about partialing or taking risk off the table. You might even choose to put your stop loss even higher, or just below this candle's low when you see it close below the lower quadrant, and below or just below here. So these processes are going to keep you from making silly decisions. These processes will make you mechanical, and you won't make it based on a wick. You'll see the true intention of price by making your decision on the candle closure. So that is the golden arrow: true manipulation, MMXM framework, second stage of distribution after we ran a low in a key level, and then we had the golden arrow after. Breakaway gap doesn't even get traded to. These are the beauties, these golden arrows. So look for these golden arrows where the breakaway gap doesn't get traded to. Look to have your stop loss below the breakaway gap. I know it's going to be scary, but you see why the logic states that it should be left unfilled, because we're in a rush higher. And again here, what do we leave? A partially unfilled FVG, which is also a breakaway gap, and then that accelerates us towards the TP. So that is the golden arrow, people. That is the model that I want you to all focus on, and this one was perfect. Two forms of true manipulation: the first here, the second here. Full fill created a protected low, breakaway gap below it, then a breakaway gap golden arrow after a second true manipulation. So this was honestly a plus setup, and that's why I'm showing it to you. Look for them all to be like this, and that is the gold standard of what a golden arrow is. So hopefully you can use this model and implement it, because you won't need another model. If you can make 3R, I've even made 6-7R off a golden arrow in less than 20 minutes. So just focus on it. All time frames it works on, all MMXMs it works within, so make sure you utilize it. And I know it's a different model to something that you'll feel comfortable with, but there's a reason you see people in the group performing with it, because once you can get over the mental barrier of it, all of the inclinations they uses and all the properties of the PD arrays it uses is for quick, snappy responses, quick entries, quick exit, and that's what we want. Quick velocity of price. We don't want to be sat in a trade and then it's bouncing around break even for ages. We want low resistance liquidity runs that I've taught you about, true manipulation, breakaway gaps, immediate rebalances. Align it with MMXM, especially the second stage of distribution or the second stage of accumulation, and then you align that with a dollar key level and an SMT on the bond market, and you're really starting to get somewhere. So that is the model, people. Please look into gathering data on it and your own personal style, how this stop loss placement will work with your emotions, and that is the key that you've been looking for.